Didn't watch Happy Days, not one episode. I'm too young for that shit. What the hell's wrong with these people? The Fonz and whoever. I couldn't tell you who the hell they are. They weren't cool. What's his name? Harry Winkler. He's not a cool dude. Look at him now. You're embarrassed. If that was your dad, you're embarrassed. Yeah, he was cool in the Fonzarelli. What was his name? Who knows? Who cares? Coke Zero. I had the stream for members only for a minute, and I was like, open that shit up, bro. Don't lie, we all know you had the lunchbox. I still don't know what you're talking about. First off, Hulk Hogan, I came from a generation where we didn't have money for lunch. The rich kids had lunchboxes, bro. The rich kids took the lunch to school. We were over there, man. Me and my brother, we had a whole system, bro. How to eat at school, have no money. You guys weren't ready for us. GameStop Happy Days was tight. Oh, okay, cool, Pops. Appreciate you. Shout out to Willie. Hey, I will tell you this, guys. I had a great morning. My dad doesn't realize it. Morning. Who cares? Nobody cares about my morning. I care about GameStop. You guys want to talk about the good stuff? The good stuff? You know what's the greatest stat that I read? It was someone actually put it together. They put up a chart, and it said GameStop is so grossly undervalued. Like more than any stock in the history of finance. And they'll try to make it routine like, hey, they're just cash and they just leverage their company for cash. What are they going to do with it? It doesn't matter. You guys got to understand, GameStop is a viable company. GameStop is a profitable company. And as the article said, they're not a SPAC. It's not I think we can, we might. No, they've been in business for 25 years. They literally make hundreds of millions of dollars, and they have $9 billion cash. They have the same amount of cash as Walmart. Like, that means a lot to a lot of people. But the fact that their market cap is about 2% higher than their cash on hand, that's the part where it's crazy. We're talking about 92% of GameStop's market cap is Bitcoin and cash. 92%. No way. No company's even close. No company. Not Apple, not Nvidia. We'll talk about how overpriced that is. I thought California outsourced their landscaping to illegals. See, John, you've been saying some stupid shit lately. Like the last 3 weeks, you've been saying a lot of dumb shit. And me being the son of a gardener, me being the son of, or my grandfather was a gardener. They also picked in the fields. I am very offended, John. I'm so offended. I am so thin-skinned when you say shit like this, bro. Like, how dare you try to make fun of people for the jobs they keep? Oh, my God. What is this shit? Do I live in New York? Is this crazy? Are we going to tax the rich and feed the poor? I mean, what is it, man? Are you not paying and watching me right now? The child of a grape picker? How dare you, John? Ugh. So gross, John. We're going to hire you next to wash my dishes. Take the kids for a walk. Take the dogs for a walk. I call them my kids. Oh, I'm so offended. Matter of fact, John, it was so hilarious when you wrote it. John, you should write for The Tonight Show. You're hilarious, dude. Oh, my God. And there I was, telling that illegal boyfriend of mine, do what you do best. And then he unplugged my television and ran away with it. What? What? Like, do you know what you're saying when you say it? People are probably looking at me like I'm crazy right now. Marantz, what are you doing? Don't worry, guys. Hey, this guy named John T. Singles. This guy, John T., you don't sing shit. You're the type of dude, man. You're the type of dude. Look at this. Zero offense intended. Cost-effective to outsource. Huff. No. Dude, do you really think you offended me? No, do you not see the sarcasm? Do you not understand? I'm just saying you're unaware. You're unaware that you're not funny, nor do you even offend me. Not at all. It's laughable. It's like, why are you talking to me? Why are you even saying shit? Why are you making comments? Oh my God, bro. I saw the Border Patrol today, and I was like, ice, ice, baby. Oh my God. I played Pokemon. You gotta catch 'em all. I did all that. Yeah. So stupid, dude. John, this is John. We'll type it in the chat. I got a good one here. And then they said, not making enough to support your family. Should have gotten an education and went to college. Oh, Ben, you tell him, bro. Tell him. Poke the butt, man. Right about here. Right out of here. Yeah, bro, he's okay. College was created to justify people paying people unlivable wages. Benwin. That's pretty wild. I guess. What do you mean by unlivable wages? Have you ever lived in the Western world? Like, we are extremely entitled. We have egos. And we only care about measurables, right? Do you have a house? Do you have cars? Do you have cash? I mean, go ask your own family. Oh, man, that dude's a loser, bro. Guy's a loser. Huh, he rents a house. That guy's a loser. He rides a bike to work. Oh, my God. Not a loser, bro. It's about the things you value. I drove by an encampment today. There were probably 40 Winnebagels. Winnies. 40 Winnebagels in the middle of the desert where these people put pallets around them to create their own yard, and it's where they live. They live off the grid, as they call it. I told my pops, I said, check out all those off the grid Winnebagels. My dad's like, man, just imagine how much money they're saving. And I'm like, yeah. I couldn't imagine them having jobs either. But yeah, I could imagine them saving less, or saving more and burning less. But maybe to them, their life's complete. Maybe they're happy. What's the problem? I'm not judging people. Marantz, that shirt on you looks awfully tight. You might want to take it off and return to your kid's closet. This is an undershirt, by the way. It's supposed to look tight. And Hulk Hogan, I don't know how many times I got to tell you, don't worry about me and my shirts, bro. You know, you're the type of dude who thinks you could take me because you're still in the military. Bro, I'm telling you, any of you cats out there want to take me out back, oh, pack a lunch, bro. Pack a lunch. It's going to be hard. You and your pop's going to start climbing mountains again, or like what? No. My dad's taking off. He's going to go see Rico. He's going to be gone for a month. Rico and my sister. I don't know what they're doing. But I tell you what, my pops is actually in very good shape today. Bros, that's why I was going to finish telling you. I didn't get to tell you the story because John threw me off with his insensitive racial undertone typing. So my pops, bro, this dude was climbing up in the truck. He was jumping on top of the pile. And I'm just like, hey, you better not fall, bro. He's like, no, I'm good, man. I'm good. I'm like, what the hell is this dude doing? He was killing it, bro. And I said, Dad, do you want to have a lie down? Do you want to take a nap? It's time for a nap, Dad. Calm down. Shout out to the wifey. Wifey likes me with no shirt, a shirt. I know a few multimillionaires that just work on their laptops and travel the world in an RV. Kind of jealous. Michael. I don't know. Michael Venuti in the house, bros. Living legend. I don't know if you guys know him. Do you know it was crazy? We're looking at the market. It hit all-time high on the SPY. Right? SPX itself, the market itself, the S&P 500, very close to the all-time high. Then I'm watching all these interviews as I'm cleaning some of my weapons. You know, I got to do maintenance. And I'm watching an interview, and some guy comes on. He's like, Nvidia, Microsoft's going to hit 600. Nvidia's going to hit 200. They're just saying shit. Like, they just say shit. Like, they picked a number, a psychological, I guess, deterrent. They're like, I think they can hit this level of resistance at 200. I'm like, what? You realize they have 25 billion shares? At $200? I mean, they're going to be a $5 trillion company. Where the hell are they getting these trillions from? This is like when people tell me Palantir should be, a $200 company. And Palantir's trading at a 600 PE ratio. Not fair. Slavery wasn't abolished. It was rebranded as minimum wage. That, Ben, the second attempt. This is your second attempt, and you might have not understood what I just said to you. You getting paid a wage to do anything is a blessing. You have to have, some type of education. You have to have some mannerisms. You might even, some etiquette. Hopefully you're presentable. Personal hygiene's done. Takes a lot to go ahead and earn a minimum wage, as you call it. It's not slavery. What you choose to do with it is your prerogative. I'm broke today, guys. I'm broke every day. And I don't listen to these wannabe motivational speakers. They go, you can't say that. You'll have a mindset that you're broke and you'll always be broke. I'm like, no, that's not it. I choose to live this way. I choose to invest my money. I choose to pay my bills. I choose to do these things. How about the bills I create on my own? Do I need a $1,000 cell phone? No. Do I need brand new shoes on my feet? No. Do my kids need everything they get? No. You're not entitled to the shit you have. It's a privilege. Did you see the draft last night? Some kid, number 9, gets picked at Toronto, and what does he do? Shit. He's mad that he got to Toronto. You're about to sign a multi-million-dollar deal. Doesn't matter. Right? Cooper Flagg, number 1 overall pick, goes to Dallas. Guess what? Doesn't matter. The kid made $28 million last year on NIL deals. Name, image, and likeliness. He made $28 million as a college non-professional. He's coming into the NBA to sign a $60 million deal. 5 years later, the max deal, $300 million, $350 million, $360 million. Then a super max deal for $510 million. As of right now with the TV contracts, kid's going to be a billionaire in 10 years. Yeah. Oh, God. Oh, I got drafted by the Dallas Mavericks. I don't want to live in the greater Fort Worth area. No, Irving, no. Oh, God. And there's a GameStop around the corner? Oh, hell no. Almo lives there. Ruben lives there. I don't want to be in Dallas. And the Cowboys? Oh, no. What a poor place. Cooper Flagg, never. But could you imagine? Cooper Flagg got paid $28 million in college. Why the hell is he leaving? Oh, wait a minute. Kobe Bryant made $24 million in 2012. Just to put in perspective, like how much these kids are getting paid. It's what you do with your money. It's what you do with your money, guys. I promise you. You could be getting paid minimum wage right now, and it's not that you're a slave to the system. You choose to live within that system. You choose to buy the cell phones. You choose to buy the cars. You choose not to do the things that it takes. Ride it low. Ride it long. Ride it hard. You know, my dad, we were talking this morning, and he said, hey, man, last truck I bought was the one you negotiated with me in 2006. I took my dad to the dealership. We bought a truck. He got his picture-perfect truck, and that's the last truck he bought 20 years ago. I was like, whoa. He's like, yeah. He goes, I've had payment 15 years. I'm like, this is crazy. I'm thinking to myself, I'm like, I could do this. Could I? Or maybe I don't want to. Maybe my wife would be like, no, baby, we're not going to be driving that old piece of crap. We're going to get us something reliable, something to get us from point A to point B. It all depends on what you want to do or what you have to do, right? But the things you have to do can get changed. Did you guys see this new thing about New York? There's this guy. I don't even know his name or care to know his name. He's running for New York City mayor or whatever. Now, Mayor Eric Adams, I do know him, who's trying to get middle of the road, trying to get, bipartisan support. He's trying to tell you New York's this, New York's that. Well, we got this new guy's trying to reset the whole system, saying, you know what? Anybody who wants to do business in New York is going to pay 11% tax. They pay 11% in New Jersey, they're going to pay 11% here. New corporate tax. You want to sell your products in our state? In our city, you're going to pay the tax too. We're going to tax the rich, give to the poor. We're all going to be great. Oh, okay. Bye-bye, New York. We're going to make anti-Trump measurements. You know what? Peace. Watch Houston become the mega kappa of everything. Miami, going to be the new everything for finance. You guys don't believe it? They left Chicago, guys. King Griffin moved out of Chicago. Everybody lives in Florida. No state income tax. There's a lot of things going on down there with DeSantis. And or they'll go to Texas. Go ask Elon Musk. You guys want to F around and find out? Let's do it. Let's do it, New York. But remember when I said you're too young to never forget? Well, apparently they have forgotten. What do the Cowboys and the dollar have in common? They both get folded every Sunday. That doesn't make any sense at all, bro. That makes zero sense. Cowboys have 2 games on Monday night. They have 2 games on Thursday night. That's already 4 wins right there. They're not getting folded on a Monday and a Tuesday and a Thursday, whatever it is. Go learn the schedule, Hulk Hogan. Don't start with me. We all know Dallas Cowboys win the whole damn thing. The whole Super Bowl. All right, let's talk the stock market. Let's do it. Everyone moving to Texas or Miami for tax purposes. I told you, Hulk Hogan. All right, kitty cats. Let's go look at the market. Let's go. GameStop looking healthy right now at 23.88. I'm happy about that. I have no problem with that. I don't know why I'm yelling over here when I have you guys on my headphone. I just remembered that. 30% of my pay is straight to my 401k. That sounds stupid. Wow, Hawaii for life. You are not very, you're not very smart, bro. Could you imagine throwing, what'd you say, 20% of your pay to your 401k? Oh my God, that's stupid. 401k usually is derived from the market. I don't know what the hell they're putting in that mutual fund that you got, but if you're buying the market at the top, not financial advice, but me personally, I put 1% of my check into 401k. 1%. Oh, I know. Marantz, what are you doing, Marantz? I'm extremely successful. Yes. Extremely successful. You know why? Because I have GameStop, babe. I have GameStop. So the fact that I get free shares or whatever from my employer, a certain amount of money every year, that's on them. But I got GameStop. That's all I want to buy. You guys know that. I'll show you the chart. I'll show you my GameStop later. But, let's talk about it. We're going to talk about it a lot right now. First, what do we want to do? You guys want to do Nvidia first or you want to do GameStop first? I'll let you guys pick. Type in the chat right now, do you want GameStop talk or do you want Nvidia talk first? Because Nvidia is driving me down a whole different world right now. I'm ready to fight. But we'll go from there. As I get you in right here. Boom. Now, I did not buy any GameStop today. My threshold has been reached for risk for the week. That's fine. I'm stuck right below $27,000 right here. Here's my screen. So I'm officially losing $984. That's it. After $27,000 almost put in, I'm down $900. That $900 can flip and switch anytime on any news, on any event, which it has not done. But it will. I'm 100% in this cash position. This is not a margin account. This is straight cash. So right now, if I want to walk out of here, I'm walking out of here with $26,000. Okay. What would you do with the $26,000 if you let you walk? You'd probably use it and spend it. All right? I'm sure people will be like, man, I'm going to get a bag. I'm going to get a brand new car. I'm going to get that thing I always wanted. Okay, cool. That's your legacy. Not mine. All right? So, why do I like GameStop? Why do I even care? Why do I look at it? Well, one, I love the company. Go ahead and look at the website right here. I don't know. Did you guys pick GameStop? I didn't get to see. You guys pick GME? Okay. Well, whatever the hell Jay says is what we're going to do. Some of you guys said Nvidia, but Jay came out and said GameStop. And you know what? Jay's my boy. So shout out to Jay. I didn't see any of you guys come visit me. You guys came visit. Jay came visit me last month. What's up, Marantz? Nice to meet you, bro. That was it. All right, check it out, Jay. GameStop, great company, right? This is the website selling PSA-graded cards. I was checking them out. They're amazing. You know that. They had over 8,100 cards available to them 3 days ago. They're currently sitting on 7,893. They're going through them all. Just remember, the value of the cards themselves could be one video game. Could be a whole console. Just depends what we're buying. Right here. Here's a card The image is coming. It's on its way. What does it cost? $327. Without a doubt. Without a doubt, they're going to get the price. They're going to get everything they want because these cards appreciate in value. They do not depreciate. Certainly Pokemon cards. They're sitting there in the vault. They're going to go up in value. That's GameStop. That's the website. Awesome. Okay, cool. Here's the company. Here are the fundamentals for GameStop. If we look at it, market cap is $10 billion. 9.1 of it is going to be cash and Bitcoin. I'm okay with it. I love it. Then you have revenue, which is over $3 billion. Net income over $200 million in the positive. They make 47 cents per share right now. That 47 cents per share will be going up. It'll be going up. If you look at the PE ratio, the forward PE ratio is coming at 37.5. They know damn well that this is not a sell. They also know that it's not coming down 42% to get to their price target of Wedbush, who's an idiot. Wedbush, complete morons. The Wedbush is pumping Nvidia like you've never seen. This little video we don't have to watch. We don't have to watch any of this. It's all old stuff. We're fine. Financials, just to be clear on the trailing 12, GameStop is coming in with about $57 million worth of operating income. We know that it's more than that only because you're going to get rid of a couple of things. We're going to go to quarterlies real quick. I love this for you guys. Operating income right here, $27.7 million in addition to, or 24.7 plus the 76. They're already at $100 million operationally. If you take away these two last quarters where they lost $51 million, we're going to add those at zero. I'm going to go 0 and 0. And why can I add those at 0? Because right here, SG&A operating expenses, we have dropped that down by about $60 million. So if you go 60 million and you get another 60 million, 50 million, somewhere in that range, then you're okay. There's nothing they can do because we actually have a greater, I'll show you here, gross profit margin. Our gross margin used to be 31%, used to be 29%. The year before that, it was 26%, okay? 26 to 26. We are now all the way up to 34.5%. And you're going to continue to go up on gross profit margin because we're selling more cards, we're selling more what they call services, and getting your cards graded, all the above. That's all value. So it's coming. We're going to be great on earnings moving forward. Operationally, we're going to be increasing. So give me the $51 million back, okay? Give me $51 million back, and I'm good with it. I'm good because now we put the 51 on top of the 100 million. Now you're at 150 million operating. Now you add in all the interest. This 39 turns into 59, which we know because we're at 56.9, and that's just based off of $4 billion, not the 9 that we currently have. Then you have 54 and you have 54, right? So if we're all at 60 million on average, I'll just ballpark it for you and call it 57 for the 4 quarters. That's $220 million. I'm being fair. But if I take the $220 million and I add the $150 million, we're now at $370 million worth of profit for the company. Now we're not done. Because there's this one little variable that no one's taking into consideration. It's not taxes, guys. It's not hopes and dreams. It's called Bitcoin. And they bought 4,710 Bitcoin. Now, they might have bought it for $93,000 a coin. They might average at 95. We'll find out at the end of this quarter. But it can't be more than 112. And I know it's not. We didn't buy it at the top. But let's just call it $100,000 a coin. I'm just being fair. I don't want to get it wrong for you guys, okay? $100,000 a coin. When you go back over here, remember the number's 370 profit right now, and I'm only going flat on quarter 2 and 3. I'm not even saying we're making a profit operationally. I called it flush at 0. Are you guys familiar with that? I called it flush at 0. If you don't understand what I'm saying, I'll get it to you in a minute. Now, here is Bitcoin. Bitcoin's at 107. So if they averaged, and this window here, this purple window that you have here, is when GameStop bought in and wrote it out. So they bought in, they found out where they were. Did they buy in again? Is their average around here at 103? It wouldn't matter if it's 100. I'm just saying if it is, you're at $7,000 a coin. You have about 5,000 coins, around $35 million worth of profit. Don't worry, it goes to the bottom line. We'll talk. But that puts you at $400 million. $400 million, and it all depends on where Bitcoin ends at the end of July. I digress. Let's go back. When we go back over here, we're now walking in at a $400 million company, profitable $400 million, right? Let's go back to these numbers right here, ops. Now, what I didn't take into consideration on ops, all I said was SG&A was going to be better, right? I did not tell you, well, I did tell you, but that they were actually only 30% flat on average on gross profit margin. They're going up. They're going to 34. They just sold the Switch, all the accessories, all the warranties, all the membership programs, the Switch 2, in addition to selling Pokemon cards like you wouldn't believe it every Friday and Saturday. I'm looking at a company that is extremely profitable, anywhere from $400 to $450 million this year, right now. So to be making $500 million worth of profits, I'm asking you, what's the variable that I measure that on? When you take the sum of all parts and you take net income, and it's going to be 450 to 500, I'm just going to err on the top side, and I'm going to say $450 million. I'm good with it. But for math's sake, we'll go $500 million. $500 million on profit. Do you know what you do? Times how much, guys? What do you want to do? Do you want to do a 50x or a 100x? What do they give? What's the value on teams these days? The Lakers' valuation was what, $10 billion on $200 million profit? That's already 50. We'll go 50x on profits. Is that fair? So if we're trading in at 50x times your profit, I'm tracking right here with you. I want to go look at a company. Let's just go look at the darlings of Wall Street. Palantir. PLTR. Palantir Technologies is a company that has $3 billion in revenue, like GameStop, that has net income of $500 million, similar to GameStop, right? Okay, so if that's $500 million and their net revenue is the same, I'm just saying their market cap's $340 billion. They're trading at P/E ratio of 625. Can we do times 625? Are we allowed to do that? That sounds crazy, doesn't it? I'm just asking. Doesn't that sound crazy to trade at 625 times your earnings? That's what they're doing. Okay, I'm so sorry. Don't let me pick Palantir. Let's go ahead and look at Tesla. Are we allowed to do Tesla? Let's go look at Tesla. Maybe I'm crazy. Tesla's trading at what? 186. Tesla's coming in at $6 billion with a market cap of $1 trillion. How's this fair? They're trading at 186. Maybe I got it wrong. I'll look at Nvidia. Okay, we'll look at the best stock in the world. Maybe I'm wrong. Nvidia's trading at 50. Okay, there we go. That's a reasonable PE number, right? 50 on a mark-to-market accounting. Oh, my God. Could you imagine? They're mark-to-market accounting, guys. They count all their money up front. It's crazy. It's crazy. It's like somebody asks you, how much money do you make per month? And instead of giving them how much you make per month, you say, oh, I make $100,000. And they go, what do you mean? Well, that's what I get paid a year, but I get paid right now this month. That's mark-to-market accounting. So, yeah, their earnings are 50. Phenomenal. Phenomenal. You think this company's worth $3.8 trillion? Am I missing something? Was there like some buildings being built? Was there some chips being built? The new chips are on back order and there's not enough customers, right? Mark to market. That's wild. But hey, 50. I'll just use 50. Don't let me get distracted, guys. It's 50. AKA Ferrari to F50. Okay, got it. So if GameStop was making $500 million and then they traded for 50 PE, I believe that's $25 billion. Am I right on that? $25 billion market cap, right? Okay, cool. So GameStop should have a $25 billion market cap. I'm using measurables here. It's not fair, right? So they should be trading at $50 billion. This number should be 50 billion. 25 billion. My fault. 50. Oh, 25 billion. But then you know what you do? You take the 25 billion. It's just me. Because that's just earnings. The SOAP is the sum of all parts. There's an income statement, earnings. There's a balance sheet, assets minus liabilities equals shareholder equity. That's added in. Then there's a cash flow chart, what they're going to make in the future and what you do with it. Hold on. So we have earnings. They're a $25 billion company. Believe it. By every metric. Every respectful stock analyst in the world would give them a 25, right? Or a 50 PE ratio, not a problem. Park it. Oh, it's retail. You're not allowed to do that in retail? Okay, let's go look at retail companies with more cash than GameStop. We'll go look at Costco. Okay, Costco has a crazy amount of revenue. Costco trades at what PE ratio? 55. Oh, no. We're not allowed to do that? We're not allowed to grade it versus retail companies? Why not? Everybody else does. So let's go ahead and go back to GameStop, who's now a $25 billion company because of earnings, one of the sum of all parts. Let's take the next sum of all parts. Let's go ahead and look at the financials, but instead of just the income statement, right? We did income statement. That's what we were doing here. Getting all these numbers, let's click the next screen. Balance sheet. When we look at the balance sheet, you now have cash in equivalents, right? Cash and short-term investments for GameStop is now $9 billion. We good? It is now $9 billion. You can't take away my cash. Not only is it given out on a convertible note, it's a 7-year yield. 7-year runway at 0% interest. It's free money. Believe it or don't. But they have $9 billion cash. So, I'll be fair and I won't leverage the whole position. If I went to the bank and I said, I have $9 billion cash, man. How much can you loan me? The bank would go, well, Mr. Rico, you are rich. Okay, you have $9 billion cash. Oh, well, that'll cover $9 billion already, right? Hold on. Do you guys have home loans? How about small business loans? Because it's a small business. Or it's a mega business. It's a corporation. I'm so sorry. So what do you think they would give GameStop? GameStop has no covenants. They have no corporate lending. Right? They don't owe anybody money. They don't have a loan facility. They don't have bankers telling them what to do. Their board of directors are independent. They have their own chief investment officers. They do everything themselves. Those guys get paid $0, by the way. So let me get this right. We've got a CEO that's worth billions and billions of dollars who's leveraging his own position against GameStop, and they have 7.5. Well, now it's 9. I mean, I'm just telling you, it's 9 because they have what, $1 billion, $1.2 billion. So they have $10 billion assets. GameStop does. Liabilities, they're looking at around $4 billion. They're plus 6 on shareholder equity. They got to be plus 5 or 6, right? I mean, just ballparking. My point is that GameStop, if you went ahead and leveraged their cash position like most companies do, they get value 5x, 10x on cash. Go look around again. Go ask around. I'll be here. I'll stand right here and I'll let you go find out. No? Huh. I've always wondered. GameStop has as much cash as Walmart. But they're not Walmart. Walmart has stretched out debt everywhere you can think of. Because they grew, they maxed out, and that's who they are. Oh, you don't think there's enough Walmarts? There's 10,000 Walmarts in the world. They're looking for more places to put them, right? You think they're all profitable? Or is it just an idea that, hey, if I make enough of them, then we can just go ahead and litter this world and we'll be okay because we're eventually going to keep breaking in the profits off these things. Some people open up stores to compete with other stores and then beat them out. That's what happens. It took me 5 years to overtake that position and beat them. Everybody wants GameStop to be profitable today, which they are, by the way, but I'm just saying. You don't know what they're going through from store to store. You don't know what they're going through from demo to demo, from geo to geo. You don't know. But cash alone should be leveraged like you would for anyone else. If you had cash in the bank and you want to go buy a house, what do? Give me a down payment. Give me some promise. Tell me you'll make these payments. Show me you have the ability to make these payments. You have earnings to make these payments. GameStop can earn back how much money? Over 25 years. Over 25 years, they're going to earn back just right now, based off of what the metrics that we're going with, just based off the model we have. It can scale and grow and go better, but just right now, GameStop leverage over the next 20 years is how much money? It could be $10 billion, $20 billion. It's the math we're doing, right? That's the $25 billion on a PE ratio. So hold on. You should go ahead and give them another, 25 on the cash they have? Nah. I don't want 50 billion. I mean, that's just too easy. Just give me the 10 that I am. Is that a good sum of all part? Can I go ahead and just get the 10 I am? Cool. Take the $25 billion that we're saying GameStop's currently worth, add the $10 billion from the cash they have. Let's go ahead and do that. Okay, so now GameStop's at $35 billion. What's next? Oh, we got another click. We got another click to make here. The next click is cash flow. Because there's earnings, which everyone wants to make and get back in form of dividends or stock splits or share buybacks. Then there's the cash after the fact. How does the cash continue to grow? Right? There's infrastructure here. We're not a SPAC. We're not a startup. We're not a mom and pop. We're a mega corporation, a holding company over the last 20 years. We've owned a lot of shit. We've got contracts over inventory. We have properties, distribution centers, fulfillment centers, stores in Australia, Italy, Europe, Canada. We have operations to sell off. It's worth millions and millions and millions of dollars, hundreds of millions, if not billions. Great. What's the cash flow look like for GameStop? Anybody looking? $600 million? Trailing 12 of 448? $500 million in cash where they used to lose $500 million just 3 years ago. We're now looking at a company that has a $1 billion swing on free cash flow. So percentage of free cash flow for the last quarter was 26. The previous quarter before that was 12. Don't just let me say it. Marantz, you just can't say things. You got to show them because people think you're lying. What is it, 26 versus 12? Free cash flow. Previous year, what was it? -1 and -13. What's the flip? 38%, 39% on cash flow for quarter one. For quarter three, quarter four, it was 14%, 13.5%, whatever. You're dreaming right now for a better investment than GameStop. You're dreaming. There's not a company out here, not a single one, that's being evaluated the wrong way. Oh, no, I have to go back on that. They absolutely are getting evaluated the wrong way. These companies are being tracked and given value off of nothing, thin air. Nvidia is the darling of the market. Nvidia is pumping and pushing. Let me show you a chart really quick. We're going to look at these stocks because I want you to see what I'm talking about. Mag 7. Berkshire Hathaway on Mag 7, I'm going to go to daily, has lost everything that it had before Warren Buffett was there. It's down almost $100,000 a share. One of the greatest things that ever walked on the face of the earth, where they have over 1 million shares. So when they're losing 100,000, what does that tell you? $100 million worth of market cap. Gone instantly. $150 million worth of market cap. Gone. It's a $1 trillion company. Go to Netflix, pumping all-time highs on Netflix. Costco, flat, falling down to the bottom of the triangle, can eventually pop out, but it's at the bottom. Paying attention yet? How about the Russell 2000? Battling with the 200-day moving average, cannot get above it. You can't get above it. You can't go to 243. This is your economy, America. What do they tell you it is? What did you see today all over the news? This is what you saw. SPY, all-time high. Double topped, all-time high. SPY recovered everything you lost. Did you forget about COVID? Oh, no. Let me do this again. Hold on. You're looking at the SPY, right? You're looking at the SPY. And you go, okay, how does the SPY get to an all-time high when you have companies in the red like Apple? Apple's down at the 50-day moving average, can't even get close to the top anymore. At 259 Apple was. Now it's down to 200. What the am I missing? Oh, there's the villain of Wall Street. There's the one that they're all in. The one they're all in is called Nvidia. For no damn reason other than to say it's an AI leg up. It's an AI industry. We're going to AI. Let me tell you something. I've been doing this shit long enough to know. You know what they used to do? They used to go and they used to say, the 2000 bubble and or the Y2K bug is going to crash the whole internet, and all these companies are going to get buckled and gone and done. They're going to die. The dot-com bubble. You guys remember this shit? Phenomenal time to be alive. There's this indicator called the Buffett indicator, and it tells you that at the time of the dot-com bubble, markets were so overvalued. The stocks themselves were so expensive. This is it right here, 2000. Do you see it here on the chart? You guys can see it? 2000. In the middle here, the GDP ratio for the price of stocks was at the highest it had ever been. This is the most expensive the market had ever been. Warren Buffett indicator. Then you go over to 2007. And this crashed, by the way. Completely crashed because it hit a peak. Boom. 2007, housing crisis, $18 trillion. Everything gone. Boom. Okay, how expensive is this market right now compared to the dot-com bubble? How expensive are stocks right now? This is the highest level you'll ever walk into and live in. This is why Warren Buffett sold every single share, everything he owns in the S&P 500. It's overvalued. It's not underperforming. It's too expensive. Doesn't make any sense to people. People are going on runs and people are, I just had a run on Microsoft. I just had a run on Nvidia. You missed out on it. No, I didn't. And thank you for the 50 free memberships for the channel there. Holy shit, I didn't even see that. Here's the problem, okay? The problem is that companies like Nvidia that are backed by nothing, and they're extremely overvalued, and everything's going up and to the right, yet no other stock is tracking. Berkshire Hathaway's not tracking, Costco's not tracking, Apple's not tracking. Just the things that they get to pump and control their way. You guys understand what I'm telling you right now? This market is primed for a real correction, a hard correction. And Trump tariffs are one thing, but why in the hell did the whole market crash when Trump announced tariffs and then he said they're suspended for 90 days? 90 days is up in 2 weeks. You guys remember Nvidia? Nvidia is $155 today. Do you guys remember when it was 86? I do. Why is it that no one can remember DeepSeek right now? Is DeepSeek not the problem anymore? Or was it never a problem at all? Okay, I'll explain. In December of 2024, there was this little Chinese company called DeepSeek. They proved and showed that some of the models for the AI chips that Nvidia is making right now can be manipulated and or used with lesser energy and produce the same outcomes as what they have promised people on AI. Less energy, and it's cheaper to do with cheaper chips, older chips, I should say. So all the new chips on back order, all the new chips people are buying, they don't need them. They're like, you don't even need them. We can do it with less. Now, that story was printed in December. By January, they unleashed it to the crowd 3 weeks later, and they crashed the stock. They took $1 trillion off the table on Nvidia. All the insiders sold. Everybody had positions on options. They all rode it all the way down, and now they rode it all the way back up. Guess who's selling again? The insiders. Where's your next AI story? Where's your next story? Because that's not even a story anymore. Microsoft, all-time high. CoreWeave goes public, launches an IPO. ARM Holdings, Super Microcomputers. Guess what? Everybody who's buying chips, all the new chips, those chips are going to be obsolete. They just proved it again. Someone else did this time. And guess what happens? You're going to have a write-off. You're going to have to show losses for these chips that you're actually mark-to-market accounting buying early. This market is prepping itself to crumble, and it's its own doing. People are pumping it online. People are pumping it in television articles. They're doing all the above. I don't see it that way. I've already seen it crash once. I saw it crash in April. I saw it crash in February. What am I? You think I'm wrong? I always use this phrasing, and people don't believe me. I say, math is right in every language. You can be an alien, and math is right. The math is right. You're completely overvalued. You're buying into your 401k. You're buying into this market, and you're buying it at the peak. The absolute peak. Could it go any higher? Absolutely. But who's going to take it higher? You think you can pump everything at once? You can't. The earnings don't make sense. The numbers don't make sense. You know why Nvidia looks so like it looks like an attractive investment? Because they do mark-to-market accounting. That's why. If they didn't do mark-to-market accounting, the numbers wouldn't look as good as they do. And you couldn't explain away $3.5 trillion worth of market cap. Nope. They've came and parked all of the COVID money right here in Nvidia. Between Nvidia and Microsoft, that's where all the money's at. Maybe Netflix a little bit. So are you going to cash? And what do you mean by am I going to cash? Edmicus, is it Ed? I don't know how to say your name, bro. I don't care, but just what's the question? I'm here for you. I'm not going anywhere. I'm on YouTube with a lot of people, but I'm here for you with the 4 people that I have on TikTok. What do you mean am I going to cash? I'm showing charts. I'm showing an explanation of why the market's overvalued. And, oh, hey, back to GameStop, just so that we're clear. This will be really good. Oh, Nike? Did Nike come out already? It's coming out today. The Nike earnings report. Oh, let's go look at Nike. Oh, man, didn't I say it? Are you moving to cash, crypto, or bonds? Never crypto. Never crypto. I only buy securities. I don't buy the S&P 500, though. I will not buy a single security in the S&P 500. Nike, after hours, coming down a little bit. Nike announced earnings, ATM, after the market. And, yeah, they're going to be fine. They're in the 60s. QQQ, absolutely not. That's overvalued as well. I buy GameStop. I only buy GameStop. GameStop's the number 1 performing security in the whole damn world if they were to give it the same valuations as they do everyone else. There's not a better cash pile. There's not better earning. There's nothing. Nobody's better than GameStop, guys. Better leadership, anything. So anybody can talk to me about it, and we'll talk about it tenfold. So I'm down with you. Let's talk about it, though. Let's talk about the news that came out yesterday, if you guys didn't see it, okay? Holder, good job. Let's show you this. All right, guys, so we're going to have this conversation right now about the absolute value of GameStop, the short squeeze explanation of how it's all going to work out and what you're looking at. Yesterday, it was announced that the reported short, I will always have to say that the reported short interest on GameStop has elevated 70% overnight. It is now at 19% of the float. realize that GameStop has increased their float from 306 million shares to 447 million. So to go up to 80 million shares short, basically, they're at 79.5. This is the percentage of increase right here. You'll see it on this chart. You'll see this here, 32 million more shares short. What does that mean? Some people say it's bonds, right? It's the bond offering. That's all they're doing. They're just hedging their bonds. I'm just going to let you know, you can hedge whatever you want. It can be bond arbitrage all you want. Listen to me. You go from 6% to 11% to now 19%. You can't lie this one away. You can't get it there. The shares outstanding is 447. 408 are available to short, and they have shorted 79 million. To give you an example, it's almost 1/5. 1/5. So it is the 20% that you're looking for on short interest, right? So what does it mean? What does it mean to be that short, and what does it mean, to be up against something? There's GMEU and IGME. You guys know about these ETFs that were launched. To give you an example, this ETF here by Bitwise GME option was launched June 10th. So 16 days ago. They launched these ETFs. One is a volatility ETF. What I mean by that is it's there to control the volatility. I believe it's this one here. What's in it? That's what you got to ask yourself. Holdings, right? So this is all dollars, money, cash, and the combination of options. So if you're going to have volatility and you're going to run on GameStop, it's going to go crazy. This is going to limit the volatility that comes your way. Additionally, the 2X right here, this is called T-Rex. T-Rex 2X Long GME Daily ETF. This is going to give you some type of exposure to GameStop via swaps, well, in this case, they actually do cash as well, if I'm not mistaken, the holdings in it. Right here, they do dollars and a U.S. fund, right? The problem that you have here is, this is Tuttle. And if you guys don't know who that Matthew Tuttle guy is, I believe his name's Matthew, right? I'm not a fan of him. He actually is the guy who makes the ETFs, the inverse Kramer ETF and everything else they do. They manipulate info. But they actually sprung this out April 24th. So I want to tell you what this is all about because I also want to show you stuff like this. This is a Tesla ETF that came out. Look at the date, August 9th of 2022. Another ETF on Tesla, October 19th, 2023. And then I have another Tesla on August 9th, the same 9th of 2022. Okay, pay attention on why they launched these volatility and double exposure ETFs on the stocks themselves. Okay, I'm going to show you the chart. So over here we'll go look at GameStop. GameStop launched these damn companies launched on the 10th right here. So they launched this day here, okay, on the 10th. Earnings was when? On the 10th. So they actually launched this volatility thing, this ETF, to go ahead and short the stock on down. It's not there to expose you to it. It's them as another instrument, okay, other than just the shares themselves. So they shorted the ETF all the way down and attacked the stock that way. Boom. When you saw the March one, you had March, right? Launched on the 24th, the day before, went all the way up on earnings, attacked us like we've never been attacked in our lives, all the way down to $20, from 29 to $20. So you get to attack it all the way down is one thing. You get to take the ride on the way up. You get to attack us, one thing. You get to take the ride all the way up. The problem is they're running out of time. And I think what they're doing, just me personally, I think they're setting it up for the next run. The next leg up here is going to be out of this zone and up here to this yellow line at the top. This is our true level of support. We won't fall below it. I'm just letting you know that now. But we will come up here and test and touch right here. Can you complete the other cup? This is your cup right here, your cup and handle. You can come up, reach, and then go sideways for the next 9 months. After those 9 months, you will have a breakout after March of next year. We will break out of this because this actual cup forms from, right here, forms from the 5 to 6 year wedge that we've been coming from 120. So mathematics alone is going to put you sideways up in here. You'll complete the other side of this cup, and we'll go sideways from here. But just know this yellow line never stops going up. There's nothing they can do. That's where you're walking to. So when I believe it's 2028, GameStop has the option to go ahead and return cash for the bonds and come out of them, or offer shares. In 2028, GameStop's share price is going to be, according to the good mathematicians called Marantz Rantz, it's going to be anywhere from 90 to 130 minimum. So you're actually going to get the true value for the stock. It's coming your way, but we're definitely going to be breaking out. That's just the way it's going to go. We're in a bullish pennant that no one's ever seen, and this is world changing, guys. These instruments unleashed upon you. I know that we had the other short interest. I had posted it before in my last video. If you guys didn't watch the short video I made last night, I showed you how they were using GMEU and IGME against you, and the amount of short. I think they're up like 12,000% short increase percentages on those ETFs. They're literally using these instruments against GameStop, but it's not in the way you think. It's because they don't actually buy shares in these ETFs. These ETFs don't have the underlying security. What they have a series of swaps and cash and leverage against it. That's fine. What it means is institutions are taking the ride with the ETF, and they're going to go ahead and exit out on GameStop. That's okay. Let them all out. And as they step out of the vehicle, you get to be elevated to a higher plateau. They want to make money on the way up. That's all it is. And they found a way to do it without having to buy the underlying security. They don't want to buy GameStop shares. It's okay. They don't have to. They want to close GameStop shares. So they want to get money to close. That's what it looks like on my end as I'm seeing it. So his GMED. No, thank you. Thank you. There's a lot going on. So this has happened before on Tesla. You guys saw Tesla get into the S&P 500. You saw Tesla announce a split, and then you saw Tesla run. And it would be the equivalent from $400 a share all the way to $6,000. That's what happened for Tesla. It was a 13x move after the fact. For us personally, to have a 13x move, that would take us into the realm of $300 a share. We're going to be somewhere around there, 200 to 300. You got to give it a couple of years here. You got to have time to play out. But I will tell you this: if you're just looking for a hit and run, you might get that too. Because the difference between all of this other news, right? The thing that took Tesla into like another stratosphere, and Elon Musk get to walk around saying, "I'm the richest man in the world," is because no one prepped for that change from 2019 to 2021 for Tesla. And when that happened, he set himself up to beat out everyone. And what it means is it's when the shorts transition, and go long with you. They're done fighting you. They join the team. GameStop is a $1 trillion company. I'll be the first one to tell you. I won't be the last. There is no way they can hold it down. There is so much leverage against it. This is why you have seen valuations for companies like you have never seen. When Apple is at 200 flat and they can't get to their 50-day moving average, they're down at the 200-day moving average. The rest of the market is just flat and sideways, yet there are a couple of diamonds in the rough pushed up sideways. This is why your Russell 2000 is flirting with the 200-day moving average and down there with the 50-day. Like they literally in a death cross and they can't come out because that's your market. You can manipulate markets. You can do all the above when you just focus on the Mag 7 or the Mag 5 and you're moving those around. But Berkshire Hathaway is giving it away. GameStop showing you what they are, and the true colors for this stock are going to come out. They will. People have to close this exposure. They have to switch it. Remember, you can come out of it all you want. You never eliminate the risk. Never. So they can swap it out. They can give it up to UBS. They can take it over to Credit Suisse where it was before. They can go to all these banks. Someone's going under. Someone can't carry this leverage. Or they better hope they have a huge cash infusion and they can ride it with the ETFs that are out there. Tuttle, do your thing. I don't care. I don't care what they use against GameStop. You know what, guys? I don't get frustrated. Let me show you a chart really quick so you guys understand what I'm talking about getting frustrated. Look at the daily. Here's the minute chart. GameStop comes out, boom, hits a fat candle right here, 330,000 shares, pops all the way to 2406. The very next minute comes down, back down to earth, and what do? Take it all the way down. They take it 50 cents out of here, 50 cents out of the 400 million, the 500,000 shares, That's going to be around $250 million swing on market cap. Boom, in minutes. Just attack, buy it right back up, and we finish off flush. So these are these algo attacks on the stock. Okay. That's what you're going to do. No announcements, no news, anything. But that spike will teach you a lot. That spike will teach you, one, you can't come out here and get these shares. How are you going to get 79 million shares? How are you going to do it? You're short. How are you going to do them? Where are you going to find them? What happens when volume hits the stock? We all know what happens. They shorted the shit out of the stock just to get it where it is today. They have this gap down with all of this volume, 172 million shares on a given day. They killed the stock. It's called, this share rehypothecation where they actually create more GameStop shares via the ETF. They just take them out of the ETF. They make an ETF share, has all these sums of all parts for all these, whatever they want to put in it, and they just carve out a share and short it. That's all it is. It's really simple. Keep doing that. Keep doing it. I love all the market manipulation on this damn thing. Hey, how about this? Okay? For all of you naysayers, for all you non-believers, you know who you are. You're the same people that cheer on Taylor Swift saying she's the greatest when we all know it's Justin Bieber. Listen to me, people. GameStop MOAS is on the table, and it's never off the table. It's not that he's a MOAS guy. He's not a MOAS guy. He's a fundamental guy. Oh, I'm a fundamental guy. I know how to read a balance sheet. I understand all the metrics, all the measurables. I know Wall Street is stupid as hell. They don't know anything. Brad, Chad, and whoever else, all you CPAs from the meltdown, I know more than you about this shit, and you know it, and it hurts your feelings, and it should, because you can't sleep at night, kids. You guys better get those razor blades open, cut open your eyelids, and never fall asleep. I'm the Freddy Krueger. I'm coming for your ass. Let me tell you something. GameStop MOAS is on the table, people. It's here. They wouldn't be making ETFs. They wouldn't be doing all these instruments to hold it down before it actually pops off on this shit. They're nervous. They're shaking in their fucking boots. GameStop's $500 million in profit. Not to mention the sum of all parts for free cash flow and the balance sheet itself. We're talking about $30 billion, $50 billion, and that's at your price. You want my price? My price is infinite. It never goes down. You owe me, bitches. You owe me for a long time. You owe me for 08, 09. You owe me for layoffs from jobs. You owe me for the damn COVID bullshit. You tore down 2 buildings middle of the afternoon. You owe me for New York, California. You owe me for a lot of shit. I don't sell out of sheer intelligence. And you don't close your position out of sheer ignorance. It's GameStop. Can't stop, won't stop, GameStop. I'm never selling you motherfuckers. Come get these shares and you still can't have them. I know what they're worth.